Hello everyone, it's Dennis Goossen here from Goossen CPA. Welcome back to the channel. We are trying to simplify complicated tax issues, especially these tricky cross-border topics between the US and Canada. Today we are going to dive into what US people living in Canada need to know about reporting ownership of foreign PFICs, meaning a passive foreign investment company. So let's get into it. First of all, what is a PFIC? A PFIC is a foreign corporation where 75% or more of its gross income is passive, or 50% or more of its assets are held to produce passive income. So that includes many Canadian mutual funds and stocks and shares in Canadian companies. Why do we care about this? Because if you're a US person living in Canada and you own shares in these investments, you have some pretty specific reporting requirements. Missing these can lead to some pretty steep penalties, so it's crucial to stay compliant. Specifically, you need to be reporting Form 8621. This is a must for any U.S. person who is a direct or indirect shareholder in a PFIC, so a Canadian mutual fund, a foreign, meaning Canadian or any other country, company that's a passive company. That Form 8621 reports distributions from the PFIC, gains from the sales of PFIC stock, and it also you can make certain tax elections on that form. You need to get obviously some pretty detailed information about the PFIC's income and expenses. So you can sometimes get these from your brokers, or if they're publicly available, if the company is publicly traded. The IRS and the Treasury released some final and proposed PFIC regulations in December of 2020. So there's a mix of some favorable and unfavorable changes, but here's some highlights. First of all, there's some new rules explaining how ownership of PFIC stock is attributed. There's some changes to the income tests and some changes to how partnerships are treated. You can research those further if you're interested. The thing that you need to be concerned about is that a lot of Canadian mutual funds fall under the PFIC category. So U.S. persons living in Canada, you may want to rethink your investment strategy. But if you do hold Canadian mutual funds, you do need to file Form 8621, even if these are part of your retirement savings. So understanding whether these funds are PFICs and meeting these reporting requirements is essential. There are two choices you can make as far as how to report to the U.S. You can make a QEF election, which means that you include your share of the PFIC's income on your U.S. tax return annually. Or you can make a mark-to-market election where you recognize the gains annually as if you sold the PFIC shares every year end. Practically speaking, you need to make sure you keep detailed records, including your PFIC's annual information statements, your distributions, and so forth. And I highly recommend you consult a professional, a tax professional who works with cross-border tax issues, because this is pretty complex and the penalties can be pretty steep. Navigating the PFIC rules can be quite a headache, but it's vital to avoid penalties. If you do own Canadian mutual funds or foreign stocks, you need to make sure that you are on top of your reporting requirements. Thank you for watching. If you found the video helpful, like, share, and subscribe for more tax tips and insights. And until next time, stay informed and stay compliant. Have a great day.